In this grade 11 accounting video, we are looking at the topic of bank reconciliation. But before we start, we are going to start by outlining the study method you should follow when studying for this topic. What are the things that you need to keep in mind? And then we are going to look into the cash journal, then correcting the bank account balance, and then that's when we will move on to compiling a full bank reconciliation. So let's go ahead and get started with what is the study method that you should be following in order for you to be able to master this topic. So here are some things that I need you to make sure that you study as you are taking your note, writing down your notes for this topic. First of all, you need to understand what is the purpose of a bank reconciliation. So in your notebook, I need you to have a heading that says the bank reconciliation purpose, where under it you are going to write the purpose of a bank reconciliation. Now, in summary, or in short, in simpler form, what is the purpose of a bank reconciliation? It's us trying to correct the bank account. So it's the business. By us, I mean the business. You are a business. As a business, you have the books in your business, but every month end or whatever period that you have stipulated with your bank, being ABSA, being Nedbank, being FNB, you get a statement from them, what we call a bank statement. Every time you receive that bank statement, it is your job to go through it, or it is the accountant's job to go through that bank statement to see if it aligns with the books of the business, the books that you have prepared within your business. So in accounting, we are basically saying you are the accountant of a certain business. Could be any business that you can think of, and as the accountant you are preparing books for that business. But what you cannot do as an accountant is prepare books for the bank that business banks with. So the only thing that you can do when there is an error in the bank statement that you have received from the said bank, let's say it's from FNB gives your business a bank statement, and you realize as the accountant of that business that they have made some errors. Where do you correct those errors? You can't go to the bank and ask for their books and correct it for them. You can't do that. For the business, you correct for them, but for the bank, you can't correct for them. So what do? That's where you compile what we call a bank reconciliation. So its purpose is to correct the bank statement. Then what's the other thing that you need to study? You need to know the difference between a bank account and a bank statement. You have heard me when I was talking about the purpose of a bank reconciliation. I kept referring to a bank statement because a bank statement is different from a bank account. So as an accountant, or as you are studying through the questions in accounting, you have seen a lot of times that when you're dealing with assets, especially current assets, you get introduced to what we call a bank account. This is where the business that you are working for keeps their money. So in your books, you open a ledger account that is called the bank account. If that bank account in the ledger books has errors, you as the accountant, you can fix that one. It's in the books of the business. So the main difference is the bank account is in the books of the business, whereas the bank statement comes from a bank, a separate entity, like again FNB, ABSA, Standard Bank, you name it. So a bank statement comes from them. You can't touch it, you can't fix it. That's why when it has an error, the only thing you can do is prepare a bank reconciliation statement and send it to the bank, because you can't fix the bank statement for them. But when there's an error in the bank account, it is your job as the accountant to fix it, because a bank account is in the books of the business. I hope that is clear. And then when you get into a question of a bank reconciliation, every time in the question paper, you will see that you are always asked to do these three things that are coming up next. So you have to make sure that you are comfortable with them. The first one being correcting the cash journals. First of all, knowing what are the cash journals. It's the CPJ and the CRJ. We will talk about them in detail in the next chapter. Then you have to be comfortable with correcting the bank account balance. Remember, that's the one that's in your business. And then from there, you do the framework. That will be in our last chapter. So let's get on to the next chapter and talk in detail about correcting the cash journals. Just like I said, we will have 2 cash journals. There are many other journals in accounting, but there are only 2 that deal with cash coming in and cash going out. So the first one is cash receipts journal. Cash receipts journal deals with cash that is coming into the business. So these are to record your incomes that are cash. And then we have a cash payment journal. So this is to record the expenses that are cash. I'm being specific that it's expenses that are cash because there are some expenses you will see when you do your income statement, or if you remember that there are some expenses that fall under the expense category, but those expenses are not cash. For example, depreciation. Depreciation falls under the expense category, but it is not cash. It is just your vehicle or equipment losing value, but it is not physical cash leaving your pocket. In cash journals, we record the actual cash leaving the bank account. There was cash, there isn't cash anymore. That's cash payment journal. There wasn't cash, there is cash now. That's cash receipts journal. So that's the first thing that we record in the cash journals. And then the other way that we correct cash journals when we are preparing for a bank reconciliation is having to deal with cancellations. So for example, if you had a payment that you recorded in a cash payment journal, and then it so happens that that payment is cancelled, where do you have to cancel it? You go cancel it in the cash receipt journal. Similarly, if you had an income that you recorded and you realize that that income is not going to come anymore, you go cancel it in the cash payment journal. And that's what we mean by correcting cash journals. So let's look at a question from Tabang Traders to see how to actually correct cash journals. So it says, the following information relates to Tabang Traders for November 2023. The first required in 1.2.1 says complete the cash journals for 2023. Again, cash journals for 2023, we are talking about cash receipts and cash payment journals. Before you correct them, you need to know what are the provisional totals, because we are assuming that the accountant of the business recorded some amounts, and the only thing that you are doing is correcting. That's why we are not saying record the cash journals, we are just saying correct them. So always start with provisional totals. So for our cash receipt journal, we have 104,000. For our cash payment journal, we have 102,000 as our provisional totals. So you will see even in your answer book, it will start by entering those amounts for you. If by some miracle you find a answer book that didn't start by recording those amounts for you, it is your responsibility to start by recording those amounts in their correct places. So basically, when you've put them there, what are you saying? You are saying every other thing that I'm going to do, or every other transaction that I'm going to read in my information, I'm just going to use it to adjust, to correct these values. Basically, they're saying this 104 and this 102 that you are looking at, these amounts are not correct. Your job is now to correct them. Well, how are you going to correct them? You're going to use your information that is provided. So we are going to start with our information A from our question paper. So in information A, anytime you are dealing with a question that deals with bank reconciliation, your information A will start by providing you the bank reconciliation that was prepared in the previous month. So in this case, it's the month of October, because we are now preparing the bank reconciliation for the month of November. So we see that we have a bank reconciliation from the previous month. It has some notes under it. So the first note says the outstanding deposit of 23,600 appeared in November 2023 bank statement. Anything that appeared in the bank reconciliation of the previous month, and then now in the current month that you're dealing with, they're telling you that that amount appeared. Basically what they're saying is Remember, we said that the purpose of a bank reconciliation is to correct the mistakes of the bank. So what happened there, what this situation is in October, the accountant realized that in the bank statement they received, these were the errors that were made. Those outstanding deposits that you're seeing there, that EFT 96, these were the errors that they made in the month of October. So when you find a transaction saying the outstanding deposit, you see it's in the bank reconciliation on the 10th of October 2023. That bullet says it now appears in the statement for November. So in October statement, it didn't appear. That's why the accountant put it in the bank reconciliation that you're seeing there. And then now in November, it is now appearing. That means the bank made a mistake. The accountant wrote them a bank reconciliation to tell them, hey, fix this mistake. And in November, they have now fixed that mistake. So there is nothing to correct there. That means you leave that transaction alone. It's similar to the last bullet point that talks about the EFT 96. It says EFT 96 appeared on the bank statement for November 2023. So that means in October it didn't appear. That's why the accountant put it in the bank reconciliation at 7,800, and now in November it now appears. So that means these two amounts, we're not going to do anything with them. There was an issue, the issue is sorted, so we move on with life. What you need to pay attention to is bullet number 2. It says the outstanding deposit of 52,000 on the bank reconciliation statement in respect of a fee income for services rendered. It was reflected as 40,000 on the November bank statement. After an investigation, it was decided to write off the missing 12,000. So you see from our bank reconciliation for October, on 28 October 2023, we see that amount, it's 52,000, right? So it didn't appear in that bank statement. Our accountant put it in the bank reconciliation, but instead of it now appearing in the November bank statement to say they fixed the error, they only showed 40,000, which means 12,000 is missing, and they're deciding to write it off. So that's the 12,000 that we are going to record in our cash payment journal. Why? This was an outstanding deposit. Deposit means money coming in. So it was an income that went in the cash receipt journal. So now that we have to fix the error regarding the 12,000, we fix it where? Cash payment journal. So that's how that works. And then we move on to information C. Information C, you will see it in the heading. The most important thing there is those words in the heading. It says the following information in the 30 November 2023 bank statement did not appear in the November cash journals. Basically what they're saying is these amounts that you are seeing in that extract, they appeared in the bank statement. They are correct to appear there. The problem is our accountant is the one that made an error by not recording them. So what do you need to do now? You need to record them in your cash payment and cash receipt journal. So incomes will go to the cash receipts, payments will go to the cash payments. So you see there we start with a debit order to the municipality for electricity. So basically we were paying for electricity. So that amount of electricity now needs to be recorded. This means that it was never ever recorded before. Because remember our statement said the following information is in the bank statement and it did not appear in the November cash journals. So that means inside that 102,000 of a provisional total for CPJ, this 5,600 was not included in there. So here we are not necessarily correcting an error. We are basically saying we are recording an omission. It was omitted. So we just need to enter it. So we are going to go to our CPJ and record the 5,600 because it was never there. It was never included. It is unlike this 12,000. This 12,000 was included in the 104 that's in the cash receipts, but because it's missing and we never received it, we are now cancelling it on the opposite side. The 5.6 was never recorded in the 102. That's why we recorded it. The next transaction that we see is a cash handling fees. Cash handling fees meaning for the bank handling your cash. So this is the charge that your bank is charging you for handling your cash. So basically it's a bank charge, and since it's a bank charge, we might as well record all of our bank charges. So I see an EFT charge, so this is for when they handle your EFTs, as well as your service fees. So this is for any other service that you went into the bank for. So these ones can be categorized into one thing and be called bank charges, and you can add them in brackets and record them as one, or you can record them individually. It's up to you, but I'm going to put them in brackets. So the 1,090 for cash handling fees, the 330 for handling EFTs, and the 1,140 for service fees. I'm going to put them all in bracket and record them under CPJ because they are payment. It's a payment I'm making to the bank. Bank charges always go on the CPJ with 2,560 as my total for my bank charges. Then the next item there, they say there is a deposit. It is for a service rendered. By the way, deposits are income. It means you are depositing money into your account. But it says, see additional information D. It's 37,600. So let's look at additional information D to see what it says about that amount. It says a direct deposit of 37,600 was wrongly reflected on the bank statement of the business. The bank will rectify this error. So basically what that means is this amount is not our amount. It's not our deposit. It's not supposed to be in our books, and we didn't put it in our books. This is an error that the bank made on its own in its own books. So this is an error that's in the bank statement. It's not on our side. So it now goes back to the purpose of a bank reconciliation. The bank made an error. We didn't make an error. If we make an error, we correct it in our cash journals, just as we are doing right now. But this is an error that was made by the bank, not us. So since it's the error that was made by the bank and not us, this amount will be recorded in a bank reconciliation statement. So when we get to the chapter of bank reconciliation statement, remember this amount, because we need to record it in the bank reconciliation statement. Because why? It is an error by the bank, not by us. So just to reiterate and read the statement again, it says a direct deposit of 37,600 was wrongly reflected in the bank statement of the business, meaning it's not of the business, it's there by mistake, and the bank will rectify the error. So we need to remind them where? In the bank reconciliation. So in our CPJ and CRJ, we are not going to enter that amount because it's not ours to begin with. So we move on to a deposit that is ours. It's a deposit by A. Adams, a tenant. But just to make sure that it's ours, we're also going to look at information D to confirm that. The amount is 14,200. Let's look at what information D says. Information D, bullet number 3 says, the deposit of A. Adam was for a monthly rent. So meaning it belongs to us. It is our tenant who was putting money into our bank account as an income for us. And since it's an income, it means it goes where? In the cash receipt journal as 14,200. Again, it means that this amount was never recorded in the 102 provisional balance that you're seeing there, because remember they said those amounts did not reflect in the cash journals. So we are now just entering it anew. Then we have an EFT charge that we have already dealt with when we were dealing with our bank charges. We'll move on to the next EFT, which is a payment to Patel Traders, a creditor. So in this instance, we are paying a creditor, meaning we owed somebody. Remember, creditors are the people that we owe. The people that owe us are debtors, and the people that we owe as a business are called creditors. So we owed somebody 12,400, so it goes into the cash payment journal, because that means we are paying them for what we owe them. So this is cash leaving our pockets. When they were giving us credit, there was no cash leaving us, but now that we are paying them for the credit, there is cash physically leaving the bank account. Then we have A 5.5 by a Gr11. They are not telling us what is the 5.5 for. But usually when you see somebody's name on a bank statement, a person's name, it usually means it's a debtor or a customer. But let's look at information D to confirm what we are assuming. So bullet number 2 in information D, it says the direct deposit from Gr11 was a partial payment for his account. A discount of 500 was allowed. It is not your job to worry about the discount allowed, because why? Discount is not cash. There is not a physical cash amount that we are losing. We just gave him a discount. We write it in our books. There is a journal where we record such. What we are focused on is the 5.5 income that he gave us for his debt. And because it's an income, it goes again in the cash receipt journal. It also means it was never recorded in the 104 provisional payment. So we are now entering it in our provisional payment. Then we move on to, we have a service fee. We have already dealt with the service fee when we were dealing with our bank charges. Let's move on to an interest on a favorable bank balance. By the way, when you're dealing with an bank statement, remember that a favorable bank account balance means that it's on the credit side because it's a bank statement. So if it's favorable, it means they gave you an interest for having a positive balance. That means you are earning that amount, and since you are earning it, it's a receipt from you, it's an income for you. So it goes in the cash receipt journal with 630. The next one, we have NME monthly online magazine. No, sorry, we have the EFT payment to Pablo Insurance. So we were paying for insurance. So since we are paying for insurance with an EFT of 16,000 rands, that's a payment. So it obviously is going to go into our books in the cash payment journal. So under the cash payment journal, we are going to record the 16,000. Again, meaning that this 16,000 was never ever recorded in the 102 that we are seeing in our provisional totals, because this amount did not appear in the cash journals. So now we are recording it in there. Then we can move on to the MNE monthly online magazine subscription for 250. You are seeing that they have recorded it twice, so this tells me that there is an error, but we need to go to our information D to figure out who made the error. If it is our error, then we are going to fix it in the cash journals in our books. But if it is the bank's error, then it means it is going to be fixed where? In the bank reconciliation statement, because that's its purpose. So we look at the last bullet in information D. It says the subscription to NME was charged twice. The bank will rectify this error in the new month. If it's the bank rectifying it, this simply means that it is the bank who made that error. However, remember, this is also a charge that we are paying for our subscription as well, and that charge was never recorded in our books. Not the first one, also not the mistake. So both of them were not recorded. So we need to record the part that we were supposed to record, which is the payment for the subscription. And the second one, which is the error by the bank, that one we will fix it in the bank reconciliation. So we are going to record only one of the 250s, because that first one is the payment that we were very supposed to make to the subscription company. The second 250 will then be rectified in the bank reconciliation statement. I hope that is making sense. And from there, you record your new totals for cash receipts and cash payment journal. So with cash receipt journal, we see we started with a 104, which had an error made by the accountant, and once we have fixed it, we are left with a new total that is 124,330. And with the cash payment journal, we started with 102,000, which had some errors made by our accountant, and we fixed those errors, and our new total is now 150,810. These two amounts, keep them in mind, because we are going to use them in the next chapter where we are correcting the bank account balance. So when we are correcting the bank account balance, the first thing that you need to understand is that to correct it, we have a formula. Our formula says the opening balance, which by the way you get in information A from the previous month's bank statement, bank account balance. So basically the logic here is, in the bank reconciliation for October, they recorded the balance at the end of the month for the bank account. So the closing balance for October will be the opening balance for November. The closing balance for October will be the opening balance for November. Where do you find the closing balance for October? You will find it in October's bank reconciliation statement, which was given to us in information A. So information A will give you a closing balance of the bank account in October. That same amount serves now in November as our opening balance. You closed with it last month, you open with it this month. And then you add to it the CRJ amount that we just calculated, that 124 that we were just looking at just now. That's what you add there. And then you minus the CPJ that we just looked at, that 150,810 that we just closed off on CPJ in the previous chapter. That's the amount that you're going to minus there, and then all of that you punch it in the calculator and it will give you your new correct bank account balance. Now when it comes to the CRJ and CPJ, it is important for you to know that even if you make a mistake in the test, there is an amount that you are not sure of, you still have to use those amounts in their errors because you get an operational mark. So let's say you didn't get 124 for CRJ, you got 130,000. That's the, you continue with that error. You are going to write plus 130. If you don't do that, you are not going to get the operational mark. Meaning that even if your answer is wrong, your total is wrong, you are going to get the operational mark that shows that you understand that the same CRJ that you just calculated in the previous question is the one that you have to now add when you are calculating your bank account balance. The same CPJ total that you just calculated in correcting your cash journals is this exact same amount that you have to now minus when you are correcting your bank account balance. So you transferring and working with those amounts gives you an added advantage. I know that there are some students who will calculate whatever and then they see that their friend in the morning, when you get to school, you see that your friend has a different total and now you want to change when you come to the bank account. No, it doesn't work that way. Continue with the same errors that you made and it will give you the amount that you are looking for. So let's start by looking for our opening balance so that we can correct our own bank account balance. So like I said, you go to information A, favorable balance as per bank account. It's the bottom amount because it's the closing amount. For October it's 27,200. That 27,200 will be our opening for November. So you start with it 27,200 and then from there you add the amount that we got when we calculated our new CRJ total. So our CRJ total was now 124,330. Then we minus the new total that we got for our CPJ, which was 150,810, and you punch it all in the calculator and it gives you a balance of a positive 720. Notice how I said a positive 720 because it's very important for you to understand or to take note of, is your final answer a positive amount or is it a negative amount? If it has a minus sign next to it, meaning that it's a negative amount, it means a different thing from when it's a positive amount. What does it mean when it's a positive amount? When it's a positive amount, it means that it's a debit balance, meaning a favorable balance. Why? Because we are dealing with a bank account. In a bank statement, Debit means unfavorable, credit means favorable. But in a bank account, meaning the one that belongs to the books, the one that we are correcting right now, debit means favorable and credit means unfavorable. So when you get to a bank reconciliation statement, you're going to record that amount in its correct side. So meaning this one, when we get to the next chapter where we are looking at a bank reconciliation, we are going to record this amount in the debit side of our bank reconciliation statement. If it was minus, then we were going to record it on the credit side because it would have meant that it's unfavorable. I hope I'm making sense. I'm saying this because in the next chapter we are going to be doing a bank reconciliation statement. A bank reconciliation statement usually works similarly to a bank statement, where favorable to them is on the credit and unfavorable is on the debit. In the next chapter, where we are looking into a bank reconciliation statement, we are going to explain the logic behind this properly. So let's move on to the next chapter and deal with a bank reconciliation statement. We are now getting to the part where they're now saying prepare the bank reconciliation statement for the month of November. So here, the first thing that you need to know for your bank reconciliation statement is you need to know your framework. You are seeing there that I have an answer book. My answer book only recorded for me the debit and the credit and the first line item, which is balance as per bank statement. Mine was to record everything else that you see in blue. The first thing being, I need to know that this balance as per bank statement, is it favorable or unfavorable? I need to be able to identify it when it's favorable or unfavorable. So it's going to be unfavorable if it's on the debit side, meaning it's a minus amount, or it's going to be favorable if it's on the credit side, meaning it's a positive amount, because this is a bank statement, not to be confused with a bank account, which we just did. It's the opposite of the bank account. Remember, a bank account is favorable on debit and unfavorable on credit, whereas a bank statement is unfavorable on debit and favorable on credit. Then the next line item is to credit outstanding deposits. Credit, it always goes on the credit. It never changes. There's no unfavorable deposits. Deposits is income coming in. It always goes on the credit side because it's my money that's reflected on the bank statement. So a bank reconciliation statement works the way a bank statement works, meaning positive amounts for me will be on the credit side, and in a deposit is always an income that belongs to me, and since it's an income for me, it's going to go on the credit side. So the credit side in the bank statement records incomes. That's why a favorable bank statement balance goes on the credit, because it means I can withdraw that money. It's my money. So if it's my money that I can withdraw, it goes on the credit side. Why does it go on the credit side, or why is it different in the bank statement? Basically, remember, the bank is not my business. So if I put money in a bank account and I'm basically borrowing that money to the bank, anytime when I decide I want to withdraw, they need to be able to produce that money in an instant. It's basically saying they are holding my money for me. It's still my money, it's not theirs. So to them, it's a credit. They owe me that money. So it's a credit to them. They need to be able to pay me my money whenever I insert my card and punch in my PIN. They need to be able to give me that money. It's my money. So it's a credit to them, but it's an income to me. Do you understand? So that's why when you see a debit outstanding EFTs are used for payments. It's me paying somebody. So if I'm paying somebody, it's money leaving my account. If it's leaving my account, it's not going to go on the debit, because to the bank it means they no longer owe me that money. They have paid whomever I wanted to pay. So they no longer owe me that money. So they record that amount on the debit, because if I punched in my PIN and requested for that same amount of money, I can now get it, because I have used it to pay somebody, meaning they have sent it to whomever I was paying. So I can't now request it. That's why it goes on the debit, to say that this money is no longer available. They no longer owe it to me. So to them, it's a positive thing. That's why it's on the debit, because it means they no longer owe me. So if it's positive for me, it goes on the credit. If it's positive for them, it goes on the debit. Just like the same way in my business, anything that is positive for me in the bank account that's in my business, I record it on the debit side, because debit is for my favorable amounts. So then the next line items is, if there is an error. Remember, we had a couple of errors that were made by the bank. So there are some errors where, if they have debited an amount, meaning they have charged me for something that they were not supposed to charge me in error. That means they would have debited me when they were not supposed to debit me. That's why we create a line item called credit incorrect debits, meaning I need to credit the amount which they debited in error. They charged me for something they were not supposed to charge me. Similarly, if they give me somebody else's money, we saw an example where they gave me somebody's deposit. That's somebody else's money. So I need to debit that incorrect credit. So it needs to come on the debit side to say, I can't get it. And then lastly, we do our bank account just as we calculated it, favorable and unfavorable. So let's start recording into our bank reconciliation so that this whole information can start making sense. So we are going to use information E. It says the following information in the November 2023 cash journals did not appear in the bank statement for November. So basically we are saying our cash journals in this scenario, our cash journals are perfect, meaning this outstanding deposit of 37,000 was already included in the provisional total that we saw for the cash payment, for the cash receipts journal, and the EFT 101 for 20,000 to Rambo stores for a laptop purchase. This amount was already included in that 102 provisional total that we saw. So the cash journals with these two amounts are absolutely correct. There is no need for us to adjust these amounts in our cash journals. However, the bank statement is the one that is wrong, because it was supposed to reflect this amount, but it did not. So meaning that when you go back to information C, you will not see these amounts, because the bank made an error of not showing these amounts. Right? They did not show these amounts, so we need to help them correct this error. How do we help a bank correct the errors that it made in the bank statement? We do that in what we call a bank reconciliation statement. So that's where now we start drawing up our bank reconciliation statements for specifically these two amounts, as well as some of the other errors that we previously saw in that bank statement that were made by the bank. Remember, they gave us 37,600 that belonged to somebody else, and there was a subscription that they charged for me twice. So those amounts as well will also have to be corrected in our bank reconciliation. But before we get to those two, let's start with these two first. The first one being an outstanding deposit. We said the outstanding deposits always go on the credit side, because it means they are an income, and it's an income for me, but a credit for the bank. And the EFT 102 of 20,000 always goes on the debit. So we are going to start with the outstanding deposit. So it says credit outstanding deposit. We have put it correctly there in our credit side as 37,000, and then from there we are going to focus on our next line item, which is debit outstanding EFTs. With outstanding EFTs, the first thing you have to do is write the number of the EFTs. So you see I started with the 101 and then enter the 20,000 on the debit side. So just again, outstanding deposits always go on the credit, they never change. There is no scenario where an outstanding deposit will go on the debit. And outstanding EFTs always go on the debit, never on the credit side. So let's go back to information C now and try to correct the errors that were made. So we have a deposit of 37,600. Remember, I just said outstanding deposits don't go on the debit. They always go on the credit. However, this one was not mine, and they already put it on my credit, meaning that they have already credited me with this amount, but this amount does not belong to me. Remember, information D, bullet number 1 said a direct deposit of 37,600 was wrongly reflected on the bank statement of the business. The bank will rectify this error. It was not our money. So that means they credited us with money that doesn't belong to us. So if they credited us with it, how do we fix it? We fix it by doing the opposite. The opposite of credit is debit. So we are going to have to now debit this amount to cancel it. It's similarly to how CPJ cancels CRJ and CRJ cancels CPJ. Debit cancels credit and credit cancels debit. So in the bank statement, if something was put on the credit by mistake and I want to take it out, I can't go to the debit, to the credit side and put a minus next to it. No, that's not what we do. That's not how we do accounting. What we do is we record that same amount on the debit, because on the debit, that's where we minus. The debit represents a minus. So a minus and a positive will create an effect of 0. So even if you put it in your calculator, plus 37,600, which is what they did on the credit. I get a credit for them means a plus. And then minus the same 37,600, because that's what a debit does. A debit put a minus in front of an amount when we are inside the bank statement. So plus 37 minus 37 will always give you 0. So that's how we cancel that. So because they credited me with this amount, I'm going to debit it. So that's why I'm putting it next to the line item that says debit incorrect credit, because I'm debiting a credit I'm debiting an amount that was incorrectly credited into my account. They credited it. Why? Because it wasn't a deposit, and deposit always go on the credit. But because it wasn't mine, I'm now debiting it to take it out. And then similarly, I have a subscription right at the bottom there from NME monthly online magazine subscription. They charged it twice. The first one, I recorded the first one in my CPJ because that's the subscription value I was supposed to pay it. But the second one is the one that they're speaking of in the last bullet there, when they're saying the subscription to NME was charged twice. So this is the second one. The bank will rectify this error next month. So remember, charges or a payment, this is a payment, meaning they paid this company twice with my money. That means they would have debited me, because that would have meant that I no longer have that 250. But I already paid that 250 the first time. So the second one, they were not supposed to debit that one. That's why I now need to credit it. That's why I'm putting it next to the line item that says credit incorrect debit. From there, we record what we call balance as per bank account. That's the last line item with 720. Where do I get 720? It's in the previous question where we were correcting the bank account balance. Remember, it gave me a positive 720, and next to that positive 720, I said if it's positive, it means it goes on the debit side because it's favorable in the bank account, not in the bank statement. In the bank account, it's favorable, and favorable in the bank account goes where? On the debit side. So even here, I'm going to put it on the debit side. From there, we calculate our totals, and like we said on the framework, you would have seen at the bottom I wrote equal because those amounts have to be equal. How do you equal them? You equal them with the bigger side. So you're going to calculate, you're going to add everything on the debit and everything on the credit and find out of those two amounts which one is bigger. With this calculation, it was the debit that was bigger, so it gave me 58,320. I wrote it on the debit and then also wrote it on the credit. But the credit side does not match up to that amount. So because it's missing the balance as per bank statement as my balancing figure. So I'm going to need to find out what is the amount that I can add there that would make this side add up to the 58,320 that I put at the bottom. So basically, we are putting the amount that is a missing figure there. So how you can do that is simply by taking the 58,320, minusing the 250, and minusing the 37,000 that you were given for outstanding deposits, and that's going to give you 21,007.70. If you want to check that your balancing figure is correct, when you take that balancing figure at 37,250, it should give you that total of the bottom of 58,320, and that's how you will know you are correct. If you have any other questions at all, leave them for me in the comment section below. Have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel, and if you have any questions, leave them in the comment section below.